Hey there, it's Walter here, and what I want to talk about is a really simple strategy that I learned from one of my training students. And one of the great things about working with traders around the world is you get exposed to different ideas, and it helps you to kind of question the way you do things and if there might be a better way. And this strategy I've shared with people in our private forum, and it's extremely powerful if you test it, especially if it makes sense to you. You'll probably find that it works quite well. Now, it's very simple, and it's one of the ideas that I've been working with this year in my training is this idea that if you have a setup, for example, like a naked Forex setup, that's good enough to signal a trade, like to get into a trade. Oftentimes, you can also use it to get out of a trade. And just as effectively. And so this strategy that my student shared with me years and years and years ago is essentially that. So for example, I'll share with you, oh, by the way, before I forget, if you want to see how you can take these naked Forex strategies, the ones that I talk about in the book and others, and use them to build up an account aggressively using trading psychology tactics that help you withstand drawdowns, which are the real trader killer. The risk algorithm that allows you to build a small account quickly. You can watch us build up the small $1,000 account in bigprofitscourse.com. That's where you'll get it, or click the link below this video, above this video, somewhere around here. There'll be a link that'll give you information on that if you want to learn more. So basically what we do here is we take these setups, like this kangaroo tail here. This is a trendy kangaroo tail. We sell here. And then when you get a reversal signal, you actually get out of the trade, and then you're always in the market. So the sell stop is below this trendy kangaroo tail here. The buy stop is above this big shadow slash, it kind of almost looks like a kangaroo tail. It's not, because the open and the close aren't in the top third, but you get in above this high here. And so this would have been good. This setup here would have been good for 3.5 R, 3.58 R. The risk was 34 pips and it made 122. Now you get, so this was stopped out for 1 R, and that was 64 pips. So 1 R loss. Then you have another buy here. So you're actually not in the market. Once you get stopped out on this buy, you're actually not in the market now until you get this buy signal. And this one's good for 2.26 R. The risk was 49 pips and it made 111. You get another sell here. This one's good for a little bit because you get a buy signal here. So between this bend trade slash big shadow kind of, it's more of an 8-hour kangaroo tail really. You have these two candles together, you get kangaroo tail. This one's good for 1.3 R. And then you get a buy here. This one's basically essentially a loss because of this move down here. But then after you get stopped out, you get a sell here. So this sell from here down to this buy signal is good for 133 pips or 4 R, which is great. Then you get another buy here on this kangaroo tail. That's stopped out from negative 1 R, 35 pips. Then you get another buy here, this big shadow. That's good for 0.81 R, so not even 1 R. Then you get another buy here. That one's also eventually stopped out over here. Doesn't get you much at all. That's a loss of 1 R, 144 pips. The sell here. So the buy here to here, that wasn't very much. And then you sell here, the sell here to here, that's a loss. And then the buy here is also a loss. So the 2 losers in a row, two 1 R losers in a row. And then finally, you have a buy here, and this would currently be up as of the recording of this. It's going to be up quite a bit because the risk is only 22 pips on this kangaroo tail. So it ends up being currently up 4.86 R, but we don't really know where this one's going to end, so it hasn't given a reversal signal. So this is a pretty simple strategy to just kind of always be in the market. A couple of things to note. I like to use sell stops below my sell trades and buy stops above my buy trades. So the market actually has to go higher. Usually I use 5 or 6 pips on these candles. And then if it doesn't go higher, then I don't take the trade, obviously. So for example, on this trade right here, if the market had never traded higher than the high here, at the high price is at 110.69. But if it had never gone to 110.75, then I wouldn't have taken the trade. It did go to 110.75, so that's where I locked in the trade there. And then I got out as soon as this candle, this reversal candle, was triggered here on the sell. So I didn't get out on the close. You could argue that you should get out on the close, but the thing is, you don't really know if this signal is going to come good until the market trades lower like it did right here, not on this candle, but on the second candle after the signal. So there you have it. So again, if you want to follow along as we take a small $1,000 account and grow it aggressively using these principles and many others, you can go to bigprofitscourse.com or click the link below, and I'll see you there. Otherwise, we'll catch you in another video. Take care.